Hi everyone, and thank you for joining us. My name is Meera, and I'll be your host for today's webinar on the imports and exports of goods and services in Bahrain. Before I continue, please remember that if you have any questions during the session, you can ask us through the chat box on the GoToWebinar screen, and my team and I will be happy to get back to you with an answer. In today's webinar, which is the third part of our webinar series, we will be explaining how imports and exports of both goods and services work under the VAT regime in Bahrain. We'll be hosting the final webinar of this series next week, where we will explain how VAT returns are filed and how VAT payments are made. So please remember to tune in again for that. But for now, let's get started with today's session. In this webinar, we will be covering the following topics: import of goods, VAT treatment for imported goods, due dates for import VAT, value of imported goods, payment of VAT due, recovery of VAT paid, export of goods, conditions to apply VAT at the zero rate, documentation to prove export, other export transactions subject to VAT at the zero rate, import of services, VAT liability under reverse charge mechanism, recovery of input tax, export of services, services eligible for export, services ineligible for export, and lastly, conditions for zero rate to apply on exports. The first section that we'll be looking at today is the import of goods. So what is an import of goods? Every batch of goods that enters Bahrain from a place outside of it is called an import of goods. On reaching Bahrain, the goods need to be cleared through a customs process first before being sent to their final destination. A supply of goods that is entering Bahrain does not require an actual sale between two people to be considered an import of goods. For example, consider a company that has set up their main offices in Belgium and has opened up a side branch in Bahrain. They wish to shift a few boxes of goods from their Belgium office to their office in Bahrain, meaning that there is no actual sale taking place here, just a transfer of goods. Regardless of this, however, the supply will still be considered an import of goods on reaching Bahrain. In some special cases, an import of goods is not required to go through any customs duty. Instead, they are put through something called customs duty suspension. Goods that are eligible for customs duty suspension will not be applicable for import VAT. The types of goods that come under the scheme include goods that are entering Bahrain under temporary admission, goods that are placed in a customs warehouse, and lastly, goods that are entering Bahrain in transit. Here's an example to help you understand further. Say a supply of goods are shipped out of the UK to be sent to the Kingdom of Saudi Arabia. Before they reach the Kingdom of Saudi Arabia, however, they make a quick stop in Bahrain, where they enter transit. These goods are not required to go through any customs duty and are placed in customs duty suspension. Let's take a look at the VAT treatment for imported goods. The first thing that needs to be taken care of once a supply of goods has been imported into Bahrain is to determine whether the supply is subject to import VAT or exempt from it. Let's take a look at how import VAT and exemption work in detail. By default, imported goods are subject to an import VAT at the standard rate of 5%, unless they are specifically exempt from it. Sometimes, certain goods may be exempt from customs duty, but even these goods are liable to import VAT unless specifically mentioned. Now let's take a look at the conditions that result in exemption from import VAT. Those goods that have been imported into Bahrain, which are either taxed at the rate of 0% or are VAT exempt when supplied locally. These include basic food items, precious metals, pearls, stones, prescribed medicines, and medical equipment. Other equipment and necessities for persons with special needs. When importing these goods, the importer is required to have relevant documentation according to the conditions specified by customs law. And lastly, imported goods that have already been listed under one of the following exemptions as exempt from customs duties: diplomatic exemption, military exemption, returned goods, import of personal belongings and household appliances by Bahrain citizens residing abroad and foreigners who are coming to reside in Bahrain for the first time, and lastly, import of personal effects and gifts accompanied by a passenger. Next, let's take a look at when import VAT is due. Import VAT for a batch of goods is due on the same day that customs duties for the goods are due, which is either on the day that a batch of imported goods arrives in Bahrain or the day that a batch of imported goods is released from customs duty suspension regime. In the event that customs duties are not applicable for an import of goods, then a relevant due date to pay import VAT will be assigned for the goods. Next, let's see how the value of imported goods is determined. The amount of import tax that needs to be paid for an imported supply of goods is calculated by adding the customs value to the following quantities: customs duties, excise tax, and if not already a part of the customs value, then the following values should be added as well: transportation charges, commission expenses, or other similar costs until the goods arrive in Bahrain, and any additional charges that are related to insurance, storage, packing, and surveillance of the goods until their arrival in Bahrain. Sometimes, goods are temporarily exported to a different country for repair, manufacturing, or other similar services. Once the service is complete and the goods are sent back to Bahrain, they are said to be re-imported. The value of the re-imported goods for which import VAT is due will be based on the improvement in the quality and/or quantity that has been added to the goods while they were temporarily exported. A supplier may discount a batch of goods after they have been imported. This discount will in no way affect the value of the goods. If there are no adjustments to the customs value, then the importer's VAT liability will also not be adjusted, and they must therefore not make any changes to their tax return. However, if the customs value of the goods is adjusted because of the discount, then the value of the goods will also be adjusted. Sometimes, an importer may discover that the amount of import VAT payable is incorrect. When this happens, they are to raise an issue with the Bahrain Customs Affairs before making the payment of this import VAT. Let's see how amendment returns affect import VAT payment. An amendment return is a tax return that is filed in order to make changes or corrections to a return that had been filed earlier. Some amendments may result in underpayment or overpayment of customs duty and VAT by the importer. In case of underpayment, the Bahrain Customs Affairs sends the importer a payment order and collects the adjustment. And in case of overpayment, the Bahrain Customs Affairs handles the adjustments themselves. If the importer happens to be a taxable person, then they will not be refunded. Instead, they may recover the overpaid amount as input tax in their tax return. Let's see how the payment of input tax works. The general rule on VAT payment for import states that the importer is liable to pay the necessary VAT for a supply of imported goods to the Bahrain Customs Affairs. This is to be done before they are released for general circulation. Now let's see how VAT payments are made when an agent acts on behalf of a non-registered person. Sometimes a VAT-registered taxpayer acts as an agent and imports goods into Bahrain on behalf of a non-registered person. When this happens, the registered taxpayer is obligated to pay the VAT due on the import before the imported goods are released for general circulation. The registered taxpayer is, however, ineligible to claim the recovery of that import VAT in their tax return. They can instead apply for a refund of the VAT amount directly from their client. When a VAT-registered person imports goods for their own economic reasons, they are expected to use their own commercial registration number, CRN, and VAT account number, which is also called a tax registration number, TRN. If a VAT-registered person uses the aid of a clearing agent to help them with the customs clearance process, then the agent is required to use the VAT-registered person's CR and VAT account numbers during the process, not their own. If a VAT-registered person uses the VAT account number of another taxable person, then they will not be eligible to claim the VAT paid on this import. The person whose number was used will also not be eligible to claim the VAT. This is because the import was not done using the correct number. The payment of import VAT can be deferred or put off until the importer submits their tax return for the tax period. To be allowed to do this, however, the taxpayer must seek prior permission from the NBR by submitting a relevant form. To be eligible to defer VAT payment, the importer must register under VAT in Bahrain, maintain records and documents of their import procedure and submit them when requested, cooperate and comply with any requests made by the NBR concerning their imports, and declare the VAT due in the tax return for the tax period during which the import occurred. Next, let's see how this VAT paid is recovered. A Bahrain VAT registered person can claim the VAT that they have paid on their imports of goods if they meet the necessary conditions for input tax recovery as per VAT law. A taxable person may recover the VAT charged for expenses that have incurred before their date of registration, provided the goods were acquired or imported within a period of up to 5 years before the date of registration, and if they are still in the taxable person's possession on the effective date of registration. If the taxable person uses these goods to make taxable supplies, then recovery of VAT on these goods is allowed. Using an incorrect VAT number will result in the taxable person becoming debarred from claiming the import VAT back from the NBR. Now we will be looking at the export of goods under VAT. What is an export of goods? When a supply of goods is shipped from a region inside of Bahrain to a region outside of it, the supply is called an export of goods. If the supply starts and ends in a place outside of Bahrain, even if a transit stop is made in Bahrain, then the supply does not fall into the scope of VAT law. Unlike an import of goods, a supply requires an actual sale to take place between two parties for it to be recognized as an export by VAT law. An export of goods that is taking place in Bahrain is subject to VAT at the rate of 0%. This is to allow businesses in Bahrain to remain competitive with one another. The supplier of the goods must make sure that all the following conditions have been met in order for the supply to be qualified as export and subject to VAT at the rate of 0%. The goods sold must be shipped from a place inside Bahrain to a place outside of it within 90 days from the date of their supply. The person in charge of shipping the goods can be the supplier, the buyer, or a third party acting as an agent for either the supplier or buyer. The goods cannot be changed, used, or sold to a third party before leaving Bahrain, and the supplier must have the commercial and official documents evidencing the shipment. As mentioned earlier, one of the conditions to be met for a supply to be considered as an export and subject to 0% VAT is that the goods must be shipped within 90 days from the date of supply. The date of supply can be computed as either the date on which the transport of the goods start, where the transport is supervised by the supplier, or the date on which the goods reach the buyer, where the transport is not supervised by the supplier. The goods sold in shops located in the departure and arrival areas of an airport or port in Bahrain are subject to 0% VAT if all the following conditions are met. Goods are sold in a departure area of an airport or port which is scheduled to leave Bahrain after all the customs and security checks have taken place. A passenger intends to leave Bahrain for a place outside of it in possession of the goods, where the goods are typically not meant to be consumed while the passenger is still in the departure area. And the supplier has obtained and retained evidence that this passenger intends to leave Bahrain for a destination outside of it. Next, let's take a look at the documentation used to prove goods as export. A supplier must have valid export documents proving that a supply left from Bahrain to a place outside of it within 90 days of their date of supply, in order to apply Bahrain VAT at the 0 rate. Here's a list of the required documents. The documentation issued by the Customs Affairs at the Ministry of Interior to confirm the export. This document must be in the name of either the supplier, buyer, or a third party acting in one or the other's behalf. The commercial document which identifies the supplier, the buyer, and the place of delivery of the goods. The transportation documents confirming the delivery of the goods outside of Bahrain, such as a bill of lading, airway bill, or certificate of shipment. For the sales of goods in a departure area of an airport or port, details from the boarding pass of the buyer, such as their name, flight number, and destination, that proves that the individual is traveling to a destination outside of Bahrain. And additionally, in some cases where the shipping is organized by the buyer, the NBR may ask for sufficient evidence to prove that the goods have not been transformed, used, or supplied to any third party between the date of their supply and the date of their shipment. Let's take a look at other export transactions that are subject to VAT at the 0 rate. A supply of goods sent to the customs duty suspension regime, provided the goods are moved into the regime within 90 days from their date of supply, such as supplies of goods transferred from the domestic market to a customs warehouse. A supply of goods within a customs duty suspension regime, such as supplies of goods within a customs warehouse. And lastly, a supply of goods temporarily imported into Bahrain for repair, conversion, restoration, and processing. The zero rate applies for these services, the goods undergoing the services, as well as the remaining material left over from the services. Now let's move on to the import and export of services work in Bahrain. Import of services. In Bahrain, an imported service follows the place of supply rule given here in this table. The place of residence of the supplier must be outside Bahrain, the place of residence of the customer must be in Bahrain, and the place of supply of service must also be in Bahrain only when the customer is a taxable person. Although the term imports of services is not that commonly used in VAT law, services are considered imported if they meet the following criteria. They are performed by a non-resident supplier to a resident recipient who is also a taxable person. Their place of supply for VAT is a place of residence of the recipient taxable person, in this case Bahrain, and if the recipient of the services is a taxable person in Bahrain, then they are liable to account for VAT on these supplies according to the reverse charge mechanism. Imported services must be different from the services listed in the following table. This is because the services listed below follow their own special place of supply rules, which differ from the place of residence for imported supplies. Transport of goods, passengers, and other relating services to such transport must occur where the transport commences. Restaurant, hotel, catering, cultural, artistic, sporting, or recreational services must occur where the service is performed. And services relating to real estate must occur where the real estate is located. VAT liability under reverse charge mechanism. Before we continue, let's first take a look at what the reverse charge mechanism actually is. In a standard transaction, a supplier would supply goods and services to their buyers and also collect VAT from them. This VAT amount would later be paid to the government. In a transaction that applies the reverse charge mechanism, however, the responsibility to pay the respective VAT amount shifts from the supplier to the buyer. Now coming back to the topic at hand, the VAT liability for certain taxable supplies is shifted from the supplier to the taxable customer under the reverse charge mechanism. Therefore, the customer becomes liable to account for the VAT due as output tax and report it in their tax return for the relevant tax period. The reverse charge mechanism is applicable by default for the following goods and services supplied by a non-resident supplier. Supplies of services subject to VAT when purchased by a taxable person, and supplies of goods subject to VAT when purchased by a taxable person. The reverse charge mechanism allows non-residents of Bahrain to supply taxable goods and services without having to register for VAT. However, the reverse charge mechanism does not apply in cases where a non-resident of Bahrain supplies to a non-taxable person. In cases where a non-resident supplier is registered for Bahrain VAT and supplies taxable goods and services to both taxable and non-taxable customers, the following points apply. The non-resident supplier must charge VAT for his supplies to non-taxable customers, and the non-resident supplier must not charge VAT on his supplies of goods or services to taxable customers, since these customers are required to account for VAT under the reverse charge mechanism. The output tax that a taxable person owes under the reverse charge mechanism is also the input tax for that same taxable person. In other words, it is the VAT incurred on his business expenses. A taxable person may recover the VAT charged for expenses made before their date of registration, provided the services were acquired within 6 months before the date of registration. We've now come to the end of our third topic. Let's move on to the final topic for today, exports of services. In Bahrain, exports of services are taxed at the rate of 0%. This lets service-based businesses remain a little competitive since the price of services at export is not impacted by VAT because VAT is charged but at the rate of 0%, and businesses can recover the VAT charged on their expenses incurred in making exports of services. Now let's see what services are eligible to be exported. The only services that are eligible for export are those that have a supplier whose place of residence is Bahrain. Those suppliers of services that have a place of supply in Bahrain because of the application of a special place of supply rule, as per Articles 17 and 18 of VAT law, are not eligible for export. For example, services related to real estate, restaurants and hotel services, transport of goods and passengers, telecommunications, and electronic services are all ineligible for export. These services, when supplied in Bahrain, are subject to VAT at the standard rate of 5% unless specifically exempt from it. Additionally, VAT law does not apply for services whose place of supply is outside of Bahrain. Now let's take a look at the conditions for zero-rated VAT to apply on exports. It is the responsibility of every resident taxable person to make sure that these 4 conditions are met. Only then will the services be qualified as export of services and eligible for VAT at the rate of 0%. The customer receiving the service has no place of residence in Bahrain or in any of the VAT implementing states. The customer must not be present in Bahrain on the date the services are performed. The services do not relate to tangible goods or real estate located in Bahrain or in any other VAT implementing states at the time the services are performed. And lastly, the services are enjoyed outside of the territory of Bahrain or in any other VAT implementing states. To help understand better, here are the definitions of some terms used in these conditions. A customer is the person who actually receives the services based on the nature and substance of the supply. In other words, the customer must be the actual recipient of the services. If a customer happens to have multiple places of residence for VAT purposes, the residence chosen for these conditions is the address that receives the supply. Say a customer has a place of residence inside Bahrain and another one outside the territory of all the implementing states. If the place of residence for a particular supply happens to be the residence outside of Bahrain and the implementing states, then the customer is considered a non-resident of Bahrain and the other implementing states. If it is not possible to determine the place of residence for a supply, then the customer is considered a resident of Bahrain for that particular supply. Services related to tangible goods. These services are those which have tangible goods as a central part of the service, such as repair, maintenance, storage, alteration, and insurance. Services related to real estate are services which have real estate as a central part of the service, such as insurance for a property. However, these services do not qualify as directly connected with real estate as per the rules of the executive regulations. And that's a wrap. Thank you for tuning in to this webinar, and we really hope you found it helpful. We will be hosting our last webinar of the series next Tuesday at 2 p.m., where we will be explaining how VAT returns are filed and how VAT payments are made. You can find more information under the VAT resources section on our Zoho Books website. You can also follow us on Facebook, Twitter, and LinkedIn for more news and updates on VAT. And in case you have any questions, please go ahead and contact us at support.me@zohobooks.com. Thank you, and we hope to see you again next week.